You believe the stock market is a meritocracy. You think that if you study the charts, read the earnings reports, and trust your gut, you are playing on a level field against other individuals just like you. This is the most dangerous illusion ever sold to the middle class. It is a comforting lie designed to keep you seated at the table while the house quietly empties your pockets. The reality is not a game of skill. It is a mechanism of extraction. And I am here to tell you exactly how the architecture of this system is built to crush you, not because you are unlucky, but because you are necessary. Imagine the financial markets not as a bustling town square where everyone trades freely, but as a vast, deep ocean. You are a swimmer. You have energy, you have direction, and you have hope. But I am not swimming. I am the current. I am the tide. I do not need to beat you in a race. I only need to wait for you to exhaust yourself fighting against the flow. When you buy a stock because you feel optimistic, you are providing liquidity. You are the fuel. Your enthusiasm is the raw material that allows institutional algorithms to execute massive positions without slipping the price against themselves. You are not the player. You are the plankton. And in this ecosystem, plankton exists to be consumed by whales. Let's strip away the jargon and look at the mechanics. When you click buy, you are entering a contract with entities that possess information you will never see, speed you cannot match, and capital that renders your risk management irrelevant. High-frequency trading firms do not care about the long-term value of the company. They care about the microsecond gap between your intention and your execution. They front-run your orders. They create artificial volatility to trigger your stop losses, forcing you to sell at a loss so they can buy back the asset cheaper. This is not cheating. It is the rule book written by those who own the casino. They profit from the friction of your panic. Every time you react emotionally to a red candle, you are handing over wealth to a black box algorithm designed to exploit human psychology. Why do you stay?
Why do you keep coming back after the losses?
Because the system is engineered to provide intermittent reinforcement. It lets you win small, just enough to keep the dopamine flowing, just enough to make you believe that next time you will crack the code. This is the psychological comfort trap. It feels better to believe you are a trader who had a bad day than to accept that you are a participant in a rigged hierarchy. Admitting the game is rigged requires a painful shift in identity. It requires admitting that your effort does not correlate with your reward in this specific arena. The middle class clings to the myth of the self-made investor because the alternative, that they are merely collateral damage in a wealth transfer operation, is too brutal to face. But there is a way out. It begins with waking up. You must stop viewing yourself as a victim of market manipulation and start viewing yourself as an observer of systemic design. When you see a stock spike on no news, do not feel fear or greed. Feel curiosity. Ask yourself, who is selling into this rally? Who is providing the exit liquidity? Shift your perspective from the emotional roller coaster of price action to the cold, hard logic of capital flows. Money is not static. It is kinetic. It moves toward efficiency and away from ignorance. Your ignorance is being taxed every single day. This tax is invisible. It does not appear on your bank statement. It appears in the slippage of your trades, in the fees you pay for access, and in the opportunities you miss because you are staring at a screen instead of understanding the structure. The hidden tax of ignorance is compounding. While you are trying to predict the next quarter's earnings, the smart money is buying the land, the infrastructure, and the debt instruments that underpin the entire economy. They are not betting on the horse. They are owning the track. To survive, you must stop acting like a consumer of financial products. Stop buying the hype. Stop chasing the trend. Start thinking like a strategist. A strategist does not react. A strategist anticipates. A strategist understands that leverage is a double-edged sword that cuts the hand of the unprepared.
A strategist knows that velocity of money matters more than the amount of money you have. You must undergo an identity shift. You are no longer a retail trader hoping for a break. You are a capital allocator. You are a guardian of your own resources. This means doing less, not more. It means sitting on your hands when the herd is running. It means recognizing that the most profitable move is often no move at all. The system wants your attention because your attention is convertible into cash. Starve the machine of your emotional reaction. Feed it only with cold, calculated intent. When you stop playing their game, you start building your own. The market is not a place to get rich quick. It is a mirror. If you look into it and see chaos, you are unprepared. If you look into it and see structure, you are awake. The choice is yours. Stay asleep and be crushed, or wake up and become the architect of your own financial reality. The curtain is pulled back. The illusion is dead. Now, the real work begins.